Hey, Jason Wood here, the VA loan guy, with another episode of the Armed and Ready podcast. Today we have a special episode really addressing the real estate industry and how the coronavirus is impacting that, both from the consumer side, the realtor side, in the mortgage world. So I'm really honored and lucky to have Justin Brennan on the call with us today and to share with us some insight. He's a local San Diego realtor. So Justin, how you doing, man?
Doing well, man. Thanks for having me on. It's fun times right now, eh?
This is unique, that's for sure. I don't know how many people that will be listening to this were in the business during '08. I was, and there are some things that are eerily similar. The fortunate part about all the negative stuff that's happening, I guess, the silver lining, is at least in the mortgage world, this wasn't created by the financial arm of the economy, right? Like the '08 crash was. Correct. So it really is more broad spectrum. It's obviously a health related concern, which is affecting the economy in so many different ways. And I know that real estate and realtors have been deemed, an essential business, an essential part of the economy to help continue with their moves and job relocations and stuff like that. So I guess I'll kind of kick it off and ask you a couple of things. How long have you been in the real estate business, and how are you being affected with all this stuff on kind of a day-to-day work basis?
Yeah, I would say obviously everybody's affected. I think it's impossible to say you're not. I was really born and raised into the real estate industry, but more starting in the construction side through development of multifamily apartments and my family's companies and so forth. But yeah, I remember the '08, crisis, man. I was right in the middle of it with my dad's companies at that time, but I became an asset manager. If you remember asset managers back then.
Yeah.
I was handling with a local asset management company here in San Diego, handling a lot of the major banks' REOs around the country for them. Whether it was Freddie Mac, Fannie Mae, EMC, Chase, Countrywide, which obviously collapsed, and, B of A, on and on. So it was a wild time. I did that for a couple of years because, those were the opportunities available at that time since everything else was collapsing.
Sure,
so,
yeah.
I get it. And you hit the nail on the head. You said this time it's not the subprime industry, as they would call it, that took us into it. And usually the next crises are never usually the last ones. It usually happens for a different reason. But yet the Fed is always late to react. They'll usually take care of issues and problems from previous problems, and then the new one kind of arises. And this one's a health, pandemic type situation. So it's all relative to how long it goes as to how deep the economic fallout is from it, right? So I think if we can capture it and start allowing some releasing of the social distancing and quarantining by, call it May 1 or right before May 1, where that starts to release a bit, then yes, we all know we're going to have high unemployment. We're going to have high issues. We're going to have some fallout. There's going to be winners and losers, and all these things are going to happen, but it'll probably stave off full catastrophe. Whereas I think if it starts to go into May, I think most Americans are going to be able to hold off April, meaning in terms of paying their bills and their rents and most of their things. But I know come May 1, cash flow is going to become very, very, very difficult for a majority of Americans. And you're going to have a lot of people just say, hell with it. I'm not paying anything. And then you're going to start to see some things we don't want to see.
Right. Yeah. And that potential consequence is really impacting the mortgage industry right now.
Yes.
So, we're recording this last day of March, right? And the very end of February, beginning of March, the mortgage industry saw tremendous drop in interest rates.
Yep.
And that sparked a ton of volume. I mean, we had in that 2-week span, as an industry, as a whole, we had $2 trillion worth of loan applications come in.
Wow.
And, that's probably the bulk of it is refinances, obviously. But to give some perspective, for the entire year of 2019 for the industry, we did $3 trillion in total loans. So $3 trillion in loans spread over a 12-month period. Here we got $2 trillion in loans in a 2-week period, right? So
party time.
Yeah, I mean, it's it dumped the mortgage industry upside down. I mean, I give the analogy, like, you know, you had a Thanksgiving dinner where you had like 4 servings of everything and you're like going to explode sitting on the couch, and then grandma's trying to force some pumpkin pie down your throat, right? It's like the mortgage industry is in that situation. Like, they can't take any more. And beyond that, what happened was, you know, we had that extreme drop in rates, and then the coronavirus really started to excel, and the Fed then started to jump in and make moves, right? And the moves they were making they were hoping it would be helpful, and some of them were. But when they did that emergency cut on a Sunday, dropping the Fed prime rate to 0, which is not related to mortgage rates, it really sparked a lot of fear in the markets, right? In the stock market, in the mortgage-backed securities market, and things really started to unwind. And you couple that with that extreme amount of volume, and what lenders had to do to protect themselves with their locks and their pipelines and everything else is they had to raise rates.
Yeah.
To protect all that stuff. And so they did. And
yeah,
so
and I know it has a lot to do with, I was reading a great article about, I'm sure you've read it too, about, you know, between, you know, originations to the servicing industry to then the investors behind it. And there's that whole relation, right? And buying bonds and the whole thing that the Fed was doing. But then, like you said, investors in the lenders are obviously trying to hedge risk.
Right.
And when they see all this new origination of new loans coming in, they're like, yeah, that's great, but we also have servicing industry. That means faster payoffs, which means less money, which then, you know, kind of exacerbates the problem. And then people who want new loans, well, now we're worried about, are they going to have a job in 3 months, and all these other things kind of moving together. So
yeah.
It creates a risk problem. And that's why you've had these rates go like this, and it is where it is right now.
Yeah. It's kind of locked things up, and it's created a knee-jerk reaction, and it's all down the chain, like you mentioned, with like the servicers and stuff. And I know some of that's probably beyond the average person's comprehension of how the mortgage industry works. But, you know, if they get a loan through a guy like me, and, you know, I do the loan for them and they close it, after that, it goes to a servicer. And essentially the servicer pays the mortgage origination company a fee to take over the servicing on that loan. And their business model is to collect interest over time, you know, the interest you're paying on your mortgage, to run their business. And the typical break-even point for a servicer is about 30 months. So they need almost 3 years of collecting interest to break even on what they paid my company, as an example. So when you had this rapid amount of loans come into refinance, I mean, they're always accustomed to waves of refinances, but this was a
onslaught,
tsunami, you know, of refinances, and it's buried them, and it's taken their liquidity away. And then you throw in the scare with jobs and forbearance agreements and things like that, and the part that the servicer plays is they have to send your mortgage payment to the mortgage-backed security holder every month, whether you make it or not. They have to send that money. So they're just being squeezed at all angles from a revenue standpoint, and they're out of money. You know, they're hemorrhaging money right now. And so the only way they could try and salvage things and pump the brakes on this a little bit was to raise rates and kind of stave this all off and get to some point of calmness. And it's going to come back. You know, we're going to come back to the low rates and everything. All the economic indicators and things support that. But we just have to get through this gluttony of loans that came through and get the stock market and the economy back to some sort of level playing field, so to speak.
Yeah. Yeah. And I think everybody, you know, when Trump said, I think it was yesterday when he came on, he says, you know, we're kind of putting it all on the line for the month of April. That's true. I mean, because he understands, along with a lot of folks, that it is critically important that at least in the state of New York and the state of Seattle or Washington, right? Let's call it New York City and Seattle for a moment.
Yeah.
Where the hot spots originated primarily, and they're, you know, going through the roof currently. And then of course there's some other hot spots starting, but those two first ones, they have to begin to see the new cases start to slow, right? We know they're going to continue to go up. That's not the problem, but they need to start to see from going exponential, you got to start to see it do this versus this. And that's all that markets are going to need, because when that happens, it's going to start to be like, you know, like, okay, there's a little inkling of hope and light at the end of that tunnel.
Yeah.
Because New York was the hotbed, the major one in Seattle, same thing. Okay, now it's a 60-day window. Like, we know it starts to give people like a foreshadowing of what, you know, Los Angeles could look like, or what maybe Florida or Chicago or New Orleans or some of the other potential hotspots, how that timeline can look, and give people like, hey, there's light at the end of the tunnel. And that's all the investors in the stock market are going to need to kind of like settle them down a little bit.
Right.
Along with a lot of other people too, right? Because everybody's just in such chaos because they don't know how long this thing is going to go, right? They just need an inkling of a time, right? And hope.
Yeah.
And that alone, when that happens, once you start to see that come across the airwaves on the media, where, hey, we're starting to see a leveling in New York, which Cuomo came on this morning and yesterday and started saying, hey, we're starting to see a slow of new ICU patients in New York. So if you start to see that consistently over a trend of, call it a week, very good sign. And that's what we need to see, because the minute you see that, it's going to start to change the momentum and the mindset of people. Like, oh gosh, okay, there's light at the end of this tunnel.
Yeah, there is. And I think too, there's so much press on all this stuff, and, some of it can be negative. So I think part of it is just, mindset for all of us, not to be, to be wise and smart, right? I mean, to do the stay at home stuff and wash your hands, and like, all the things that they've instructed us to do to help contain the spread of this thing, but also just have some faith, that we're going to come out of this and be better and stronger for it. And I honestly believe that we will be. But we're going to go through a month or two where it's going to be pretty rough. But fortunately, the government, they've come out with some pretty good things. I think for consumers and in the mortgage forbearance thing, I would caution people to handle that with care, because in order to get it started, you need to call your mortgage company. Don't just stop making payments. But you need to call your mortgage company and talk to them, and be someone who actually seriously needs it. It's not just it's just not like a disappeared payment, right? I mean, every company is going to handle it a little differently, but you're going to have to make that payment. Some might make it due in 90 days with the other 3 payments you missed or whatever. So just be careful with that stuff. It's there to help those that need the help. And if you need it, absolutely take advantage, but just be wise with it, make sure you're making the right decision.
Yeah, and to give you an idea what we've done, because we own apartment complexes as well, and about 100 units and a couple different complexes. We already have a letter that is going out today to all of the tenants that's, spells out the process they need to go through if they want to request a forbearance of rent for a period of time and so forth, because we have to presume it,
Sure.
And it's only going to be a percentage, right? Let's call it 20% of the renters are directly affected right now today because of a loss of a job or something to that effect, where they just need it to be forbeared for 30, 60, 90 days. And then we'll waive late fees and stuff like that for the tenants of the buildings. But we're trying to be proactive about it and set up guidelines so that way, they got to show proof of, of an issue, a loss of a job, unemployment, letter from an employer, that type of stuff. So there needs to be some proof of it. So that way you just don't have the onslaught of everybody saying, hey, free rent, or, or mortgage and stuff. There's
Right.
processes for it, but we were proactive in it and sent it out literally, and it's going out today. So that way for people's April rent, we're working with folks to give time and or do partial pays or, forbear it for a certain period of time, depending on their certain situation, case by case. But that's what we're doing. And then on the flip side of it, because a handful of these mortgages that we as a landlord own are Freddie Mac loans, right, on the apartment complex.
Right.
So we legally have the right now, and we've requested it from CBRE Loan Services and the Freddie Mac Loan Services for a forbearance, for this, 30, 40, 50 unit apartment building. So it's all going to kind of transcend itself. And then at the end of the day, the lender is going to get help from the Fed. So it's all going to kind of backtrack its way, and the Fed's going to help out the lenders. You watch. It's already going to start. But
Right.
That's how that's going to work. But it starts with the consumer getting the forbearance, then it goes to the landlord, because obviously we're going to get hit at a certain point, and then we get help, and then the Fed helps the lenders. And that's how that's all going to flow.
Right. How are you seeing the the local real estate market? I've talked to several people, and people are concerned that there might be a crash in values. And I know right now it's kind of awkward to be buying a house in this. It's an interesting phenomenon. Can you speak to kind of what you forecast, what you see with the market, and then
Yep.
how are you dealing with buyers right now?
Yeah. So in terms of the market, what I see is, we definitely had a drop off in new listings as well as pendings. Just the volume in general has dropped off quite substantially since, I'd say, second week of March. And you kind of saw that trend, heading this way, and then it really dropped off pretty good about mid-March to where we're at today. Houses that were on the market, if they were vacant, they're still on the market. People are trying to sell them. If they're owner occupied, you're not showing the house right now because nobody's letting you in, nobody's letting you out. That's not happening. So that's shut down like the owner occupied showings for the most part. There's still a few here and there. But vacant properties, I still have a couple listings that are vacant. We have them staged. We'll show them. We have protocol for doing that. And then on the buyer side, I'm working with a couple buyers right now, and it's really relative to their employment situation, right? And where their job is at and how stable that is based on all the environment. But look, it's all predicated on how long is this thing going to go. If we can start to get some release of the quarantining and lockdown, like I said, by the third week of April, then it'll be less of a fallout. Right. But if this thing starts going into May, where we're sitting here in the exact same situation, locked in our homes, things are going to change pretty rapidly.
Yeah.
And so people need to be mindful of that, not to panic, but there's only a certain period of time that people are going to be able to be calm.
Yeah, agreed. Yeah, America wasn't designed to sit at home,
and we're okay right now. Things have slowed. People are kind of dealing with it, and it's fine. And I think people can absorb it through the month of April. We did it through most of March, April, but come May, things may change. So I hope it doesn't get there.
Yeah, I hope so too. What are you seeing some of your peers in the industry do just to, keep your business going? Like what activities? A typical day for a realtor obviously has been tossed on its ear. So how is like just your regular work day changed in a way that's still going to keep you earning money for your family? Like what are you guys doing in your world right now? Or what advice would you give to another realtor out there that's kind of going, shoot, this is such a surprise. I don't know what to be doing right now.
Yeah. I think the best thing any realtor or any person can do for that matter that's in the service industry is to reach out to the people and just show them that you care. Check in on them, say hi. It's so interesting. Even though we're all socially distant, we are so much connected, and this is actually bringing some cool ways of connectivity, through Zoom and FaceTime and social media and all these other things that are going on. But at the same token, people want to feel other people. So I would absolutely be reaching out. If it's not through a phone call, I'd be trying to do as many of the videos, or even sending a little 30-second video, directly to your sphere of influence, your past client, people that are closer to you, because it's those relationships right now that if people are going to remember that, if you make sure you try and you help and you care. Like what we did the other day is I had a buddy of mine who had access to 100 of those little 1 ounce hand sanitizer bottles.
Oh yeah.
And we had a bunch in stock in our promo, and I'm like, what are we doing? So I went on, I made a quick little video. I said, we're giving these out. Just click the link down below. We'll send them to your house. We'll pay for everything. You just get some sanitizer and take care of your family. And we've had we had 100. I think we have 200 people that signed up that want these little sanitizer bottles. And it's do nothing but just ask, hey, we're here. We're a resource. We're just showing that we care, trying to be out here and do the best we can and kind of give our purpose for it. Because that's the best thing you could do right now, is not to just sit back on the couch and expect that the relationships that you had 60 days ago are going to be there 30 days from now. I think you do need to nurture those like any relationships, and just reach out to them and simply say that you care. Yeah, how are they doing? How's their family? Anybody affected by it? Like, what's going on? How's the financial? Just the little things will go a long ways for people, because they'll remember that, come 60, 90 days from now.
Yeah, I agree with you. Those touch points. That's kind of what we're being coached to do, on the lending side as well, is just reaching out to people, letting them know you care. I've had a lot of conversations with people lately that have spoken to another loan rep somewhere else. And, I'm not spending an hour on the phone with everybody, but in 5 minutes, you can cover a lot of ground in a conversation.
Yeah.
And I'm surprised at how little information the other loan reps are sharing with these people. And I'm not sharing a doomsday scenario by any means, but just kind of explaining where we are, what my thoughts are on where we're headed. And, at the end of that conversation, they're like, man, I've heard more about all of this and the mortgage world and everything else in 5 minutes with you than I did, 20 minutes with the last guy. And I'm like, gosh, what are they talking to them about? I mean, it's not so much about trying to convert people into a sale right now as it is, like you said, to just nurture that relationship. And I think that there's so much hope and explanation that can be given as to what's happening right now that, those that are just trying to close a deal are missing it,
Yeah.
And just trying to get another one.
Yeah. I think the worst thing you could do right now would be going after the mindset of a sale, right? And trying to be salesy or any kind of sales or closing. I think you truly just need to let people know you care, be a form of resource, information, keep people, steady, because certain people are panicking depending on their personality styles. I mean, I look at the stock market and I laugh. I mean, I have all these friends who are, let's sell. I'm like, no, did you not read Tony Robbins' book, Unshakable? I said, that is about the stupidest thing you could do right now. I said, there's only two people on this planet that are selling in the stock market. You're a day trader and you get arbitrage, or you're 70 years old and, time, you got to get your money. So
right.
But that's it. Otherwise, you're long game. Don't touch it. I guarantee you this thing will skyrocket the minute that media comes across the airwaves and says, hey, we're starting to see a peaking in New York. Watch what the stock market does the minute that they see that. Seattle and New York, or Cuomo we're seeing a peaking. That's all the markets need. And you're going to see that thing go through the roof, and then people start to lighten up a little bit, even though there's going to be a lot of other hot spots around the country.
Yeah, I agree with you. I think as soon as we start seeing that curve, start to turn a little bit, then things are going to ramp back up. I think if you look back at 2020, once we get towards the end of the year, it's actually going to be a pretty remarkable year from an economic standpoint. I think some of the drivers will change a little because of the impact this is having. The entertainment industry and the hospitality industry, those are going to be hit hard, and it's super unfortunate. But it's going to be different. I don't know what it's going to be like to go to a Padres game, in the fall. Do they squeeze? They're not going to squeeze everybody next to each other because the first person that coughs or sneezes is going to be looked at like a criminal, right? So it's going to be interesting, and I can't forecast what that looks like, or going to the movie theater or anything like that. But it's going to be different, different for sure.
If you we can learn a lot from the Asian countries that went through, MERS and SARS and some of those, right? In America, it's funny, a few weeks ago, they're like, oh, don't wear masks, don't wear masks. And the only reason they did that is they didn't want there to be a run on the masks, right? They know the masks work. All you need to do is look at the Asian countries after, China, Korea, Vietnam, all of them after SARS and MERS. They found that it's night and day between what happens between countries wearing masks and not wearing masks. It's the data shows you. So we are going to need to get comfortable with people wearing masks in society. I think it's smart, obviously, once we get past this, as there's enough supply, obviously, to go around. People in the foreseeable future, until they get really the vaccine on this thing, people need to get comfortable wearing masks. I leave the house, I have an N95. I have it because I'm in construction. So I happen to have like 4 or 5 of them in my garage. But I'm wearing the mask and I'm wearing latex gloves and away I go.
Yeah.
And people need to get comfortable getting ready to see that at Padre games, right? You go to a movie theater, grocery stores, people just need to get comfortable and they should be wearing a mask. There's no reason not to. That's my opinion.
I think you're right. It's definitely going to be, until there's a vaccine.
Yeah.
You're right. Yeah. You're just going to have to be smart about it.
And they have the vaccine. They have 3, as you know, they're in phase 1 trials, and it's going to take time before it can actually be distributed.
Right.
But one of the companies here in San Diego, they just had them on CNBC the other day. I'm like totally blanking, but they're playing a huge role in one of the vaccines. So like the biomed industry in San Diego is massive. So people I think they know that, but it's a huge industry and very, very, very vital to what's going on right now in the country.
Yeah, no, it is. It's a big deal here in San Diego, and it'll be good. I mean, once we get news of the vaccine passing, like the first trial.
And it's not Illumina, by the way.
Oh,
It's another one. It's a smaller company. They literally just had them on. I'll get the name, but it's a local company that's been working on both testing as well as some of the vaccines and therapeutics.
Yeah. What are you seeing, like from a social media standpoint, when you look at the industry and your peers and stuff? What are you seeing there that might be a good tip for people to be doing or to not be doing?
Well, we're all guilty of it. We're all officially experts of COVID.
Right.
And everybody's, got their opinions, and, you hope people stay out of the political realm of it. I mean, it's just, I'm like, guys, no, like, we don't need to know whether you like Trump or not like Trump or like Biden. Nobody cares. Like the worst mistake you can make. Everybody's staying in their lane. Not just knowing we're all in this together. We're all Americans. No one's supposed to be fighting over who's right or wrong, because at the end of the day, none of us really know. We think we do. We voice our opinions. We're trying to look at data and this other stuff to kind of get us all through it. But we need to be somewhat careful not to, hammer away at people on social media.
Yeah.
We all know the rules. Try and stay away from the politics. Try and stay away from religion. Do the same thing here.
Right.
Just, and be mindful at the same token, because, it's very easy to even jump into conspiracy theory stuff too, as to, this whole virus thing in China.
Sure.
And we're all guilty of it, because I look at it and, my BS meter's on the rise too with it. But I'm like, I'm not going to get there at this point. Let's just let's get rid of this stinking virus, help America out. Let's get back on the right trend, and then we can worry about that stuff,
Yeah, exactly. Yeah, I think there's, from a social media standpoint too, I think there's a good opportunity, since people are stuck at home, is, to show a little bit more about who you are, right? I mean, some people are really awesome at social media and do a great job. And I see others in our space who are just like, come to my open house, check out my rates. It's like, people aren't transacting with you because you post to check out my listing on social media, right? They're warming up to you. And it's the old adage, right? People are going to do business with those who they know, like, and trust.
That's right.
So put that out there on social. That's what I think people should be doing with their social media. Put out there who you are. Are you a family person? Great. Show some stuff about you and your family. Like, no one cares that you had pizza last night for dinner, but it'd be really cool if the whole family's around and your kiddo's doing something kind of goofy or fun, and you can write a little bit about it and talk about, how this is great family time, and, like, just express a little bit more about who you are, because everybody's watching right now.
Yep.
We're not driving to and from work. We're not quite as busy as we were a couple weeks ago. So there's more eyes, there's more visibility on that feed and those stories. And I think it's a ripe opportunity, not to capture business, but to really just express and show people that you're a person, right? And what kind of person are you? Because, your sphere is attracted to you for a particular reason, probably not because you take good pictures of your dinner or because you hold an open house, right? It's probably because...
Oh, man, my dinner pictures are pretty good.
Yeah, well, with the right filter, right? Maybe some sparkles.
Right.
But yeah, I mean, I say take advantage of this stuff, tune up your Facebook page. If it doesn't say you're a realtor and you're a realtor, then put it on there that you're a realtor, right? Like, let people know what you do, but let them know who you are.
Tom Ferry said it best a few years back. He said, Tom Ferry is, I presume.
Yep.
Okay.
Yep.
Says, hey guys, real estate is one of the hardest and easiest businesses you'll ever get into. Let me explain why. He says it's the easiest business because all you need to do is go out there, make a bunch of friends, and make sure they know what you do for a living. And then he says, but it's the hardest thing you'll ever do because you have to go make a bunch of friends and make sure they know what you do for a living.
Right.
Right. And it's because everybody wants to be the secret agent, right? Or the secret lender. And there's that blend of, putting the personal stuff in the business stuff, right? Whether it's social media or your marketing and stuff to that effect. But yeah, I mean, if you think about all the funny things you're seeing on social media right now, whether it's Jimmy Fallon doing his late night at home, or, you know, all these guys doing these things from home, it's actually pretty cool because you're getting a chance to kind of see behind the scenes in people's lives.
Yeah.
You know, and you're like, oh, that's a cool background in their video, or like whatever it is, you know.
Exactly.
And you're going to see that person in a unique environment. And more importantly, you know, their family's interrupting them, which is the funniest thing ever. You know, whether it's their kids jumping on their forehead, or dog barking, or, you know, their wife screaming at them, or their husband screaming at them, whatever it is. It's kind of funny because it's very impromptu behind the scenes, and it's a bit vulnerable for people.
Yeah.
Right. Authentic, which people are kind of getting that connection. So doing that, like you said, is very, very, very important right now. I 100% agree.
Yeah, no, it's kind of interesting watching like newscasters and stuff, and you can tell they're at their house. You know, like some of them have a cool backdrop now, and it looks like they're in the news studio. But you know, I mean, I saw one, and you could see like the gal's computer on her desk over there in the corner, and you know, like she was working from home, doing her job and doing a fine job at it. But it's cool to kind of peel back the curtain a little bit and see that, you know, everybody's real and everyone's dealing with it, you know?
Yeah. I mean, seriously, I mean, whether it's a celebrity or, you know, some of these people, I mean, what I loved was John Legend, you know, doing his singing at home on his piano. I don't know if you've seen some of those videos.
Yeah.
But really cool. And there's a lot of other artists doing the same thing right now, which I think is great because you're getting kind of behind the scenes, unveiling, you know, them as human beings and getting to see them personally and putting them in their environment. So,
yeah, it's been pretty cool. It's really humanizing, which is, you know, one of the silver linings from this whole experience, right?
It's weird because it's actually making some ways better connections. Does that make?
Yeah.
I mean, we're distant. Like before, like, did you ever see one of these people at home sitting in their office with their kids or dogs or people jumping on them or whatever it is going on? They're sitting in their PJs and having a cup of coffee at 10 in the morning. I mean, you never would have seen that before.
Never.
So, and it's an interesting way because now you're going to look at that person post this, you know, 30, 60, 90 days from now when they're back in the studio or they're at their office or they're whatever they're at. And you're like, hey, man, I remember that time when you're sitting at home and, you know, your dog jumped on your table or whatever, like the weird things like that. So I actually find it pretty interesting. I think it's in some ways better connections than before.
Yeah, I think so too. And just a lot more opportunity for people to be engaging now. You know, there's less of those other distractions. So, you know, I mean, using Zoom and FaceTime and those are really powerful, and you still get to be face to face with people and yeah, it's more raw, more real. You know, you're not dressed in your suit being your best you, you know, just being the raw you, which I think people appreciate that a lot.
Big time. Yeah, it's funny. And even on the Zoom thing, you touched on it because I think the first or second day that obviously Zoom stock started to go through the roof.
Yep.
People were buying the wrong ticker.
Oh,
I think it was ZM or ZO. I forget what the actual ticker is for Zoom, but they were buying the wrong ticker. And the other company's stock was going through the roof for a period of time. So I thought that was hilarious. And they're like, no, this is the real one. Then, of course, there it goes. But I thought that was pretty hilarious. So, like, the other company's getting some benefits today.
Yeah, no kidding. That's funny.
Oh, you got to love it.
Yeah, well, we're going to make it through this. I think everyone's going to be better for it. I don't foresee any kind of housing crash coming our way. Lending's tightened up a little bit, but we're going to get back to normal here, you know, before the end of the summer, I'm sure, with guidelines and things loosening back up. And rates are going to come back down here pretty soon. So I think there's really some good positives that are going to come out of this. We're just all kind of in a holding pattern, you know?
Yeah, and I am optimistic. I am truly optimistic because if you actually run the timelines from, let's take New York, for example, March 20th, I think is when they actually went to their official lockdown. Based on those timelines of other countries, South Korea, China, some other ones, it's typically about 21 to 28 days post that lockdown and mass quarantine that they start to see a softening of new cases, right?
Yep.
And so you run that timeline, that puts New York hopefully right around mid-April, somewhere in that April 14th, April 20th. Maybe it happens sooner. I mean, it'd be amazing if it did.
No,
But that's kind of where I'm estimating things happening if everybody just sticks to what we're doing, because it is working. There's a great company that they just posted this morning called Kinstar or Kinair. They do digital thermometers, smart thermometers. And there's a website called Wealth. What is it? I was just looking at it. Wealth something. Let me look at it. This is actually really good for health. Healthweather.us.
Okay.
Healthweather.us. It shows a map. And what these guys have done, it's brilliant. Talk about innovation. Is because they have millions of digital smart thermometers throughout the United States currently today that everybody's using in their houses right now.
Right.
You can show where hotspots are going, where people's fevers are pumping up. So they're also able to fast track it and see where issues are at. It was just on CNBC. This company's amazing. And they're helping governments right now because Florida, even though they're not talking about it yet, their little thermometers are showing temperatures rise, fevers on a pretty heavy scale right now, which is dangerous for Florida because they have an aging population.
Yeah.
Right?
Yeah.
California, because of our social distancing and everything that Newsom did early on and kind of locked us down a little bit earlier than everybody else, that's having a massive impact. And you can see that in these temperature gauges of fevers and stuff. So even though we're going to see a spiking for a little bit of time here in California, the other hotspots are going to have some major issues if they don't get on it real quick.
Yeah, that's really brilliant that they're able to pull that data together. That's cool.
Yeah, and they're using it because of the thermometers, and they have them. So the minute you stick it in your mouth, because it's a smart thermometer, it's connected to a Wi-Fi service or something going on, and it's called healthweather.us. That's the website, and it's really cool. You get to see the United States in real time in all the fevers that are atypical.
Wow.
Talk about innovation. You know, you never thought, I mean, they put this on like in the last 2 weeks. It's incredible.
Yeah, that's really neat.
Yeah.
Well, there's a lot of smart people out there, man.
Mm-hmm.
A lot of smart people out there.
And most of them are in the United States. So that's why I'm optimistic that, you know, we're taking all this and the best innovators, doctors, people out there, and some amazing things are coming out of this. That's why I'm super optimistic.
Yeah. Yeah. Same here. Well, I just want to thank you for carving away a little time. I know time is hard to come by for all of us with everything going on, right? And to block out some time. So,
all right, man, we got plenty of it right now.
Yeah, I know, right? Well, some of us do. But
doing things, you know, in terms of the real estate side of it. But yeah, you're right. It's very fun times.
Yeah. Yeah. Well, thank you for spending some time with us, Justin, and being on the show, man. It's been great having you as a guest and getting some insight from someone in the industry who knows what they're doing. So I appreciate you coming on the episode, man.
Yeah. Thank you for having me. I really appreciate it. And have a great day. Stay safe.
All right. You too. Take care.